Let me quickly revisit what the market is up to. We're a little soft in trade. The breath, which started off in the positive, is now completely turned tide. We're down about 110 stocks in the F&O universe. It's actually metals. NMDC, Jindal Steel, SAIL, they're the ones which are the drags. And you can see that play out for actually the last three trading sessions, wherein you have the globally linked sectors, especially metals, which are dragging down and easing off just that wee bit. And today is no different. Today too, metals is your largest sectoral loser. Add to that power, automobiles, infrastructure, oil and gas. These are also laggards in trade as we speak right now. But let's shift focus and let's talk about earnings. What's the way forward right now? We've got Mr. Praveer Sinha, the CEO and MD at Tata Power, joining in the show right now to talk about how their quarterly performance was. Mr. Sinha, good morning. Great to have you on the show. First things first, hope all is safe with your near and dear ones and the entire Tata Power family.
Good morning and thank you for checking on us. Yes, all is safe. We have taken a lot of precautions and a lot of safety measures, including the vaccinations. So as frontline workers, we were given the opportunity to take vaccine in the first round. And many of our people in Mumbai, as well as in all our plants and sites, have taken the first dose, and we are now waiting for the second dose.
Okay, good luck with that. Mr. Sinha, just wanted to understand how the quarter went by was before I come to, the future visibility. Because I can see it was a quarter of very strong EPC performance for you.
Yeah, this quarter has been good, as has been the last 6 quarters, where in each of the quarters we have shown very steady performance. And mind you, this has been the COVID year, and we have continuously worked. All our operations have continuously worked, and they have been very, very steady in terms of the performance. This quarter also, we have been able to ensure that all our plants and all our businesses operated at full capacity. Also, many of the projects which had got delayed in the first quarter and second quarter because of the COVID impact and lockdown, we could complete it, and our EPC business and our manufacturing had for the first time crossed a turnover of 5,000 crores and the profitability doubling this year. So I think in all, this has been a very good year, very satisfying year, I would say, and a very satisfying quarter. We have shown a profit of 440 crores before exceptional items against 366 last year, which is nearly a 20% jump. And on a cumulative basis also, we are 16% more than last year, 1424 crores against 1231 last year. So I think considering COVID, considering the nature of job that we have been doing, and also the fact that we took over the Lisa Discoms and quickly improved the performance, I think this has been a very, very satisfying year for us.
Good to hear that. This is, of course, about the quarter went by. I want to look ahead into the future and going forward into FY22, Mr. Sinha. Your focus now seems pretty clear. You've spoken about as to how there is a strong need to improve the ESG metrics, focus on renewable energy. We understand that Tata Power 2.0 is a mega transformation from legacy to now new businesses to achieve decarbonization by investing in, sunrise sectors, renewables, EV, microgrids, etc. Give us some color on how the new Tata Power is going to be.
You're absolutely right. The Tata Power 2.0 is talking about ESG and talking about the transformation. So from our typically regulated business, we are now getting into a customer-focused business. Starting with our renewable. In renewable, unlike many other companies, we are into the whole chain, right from manufacturing to EPC to setting up large utility scale, rooftop solar, and then solar pumps and microgrids. And in each one of them, we are the market leaders, excepting for utility scale, where we in between did not ramp up our generation capacity. But this also has picked up pace, and we have an order book of about 1,400 megawatt, out of which nearly 1,000 will get implemented in this year. In fact, 500 megawatt we are expecting to implement in this quarter itself. It got delayed because of COVID and also delay in Chinese supplies last year. So I think we have a very, very strong capability to really change the renewable portfolio of Tata Power. And the landscape that we are getting into is more of a renewable business, more of customer-oriented business, and of course, continue our existing generation business, which is a very steady operations that we do. Let me also share with you that our distribution business has grown many times in this year. We started with 2.7 million consumers on 31st March, or we had closed last year with 2.7 million. And this year we have closed with nearly 10 million. And on 1st of April, we took another 2 million. So we are 12 million consumers in distribution. And this is again a game changer, because there is no other utility in the country in private sector which has that sort of number. We have more than double the number 2 that is there. So I think the Tata Power 2.0 is about customer-focused businesses, rooftop, solar pumps, microgrids. It's about the EPC business and manufacturing. It's about creating capacities in renewable space. And we were, in fact, the first one who took a stand that we will not add any generation capacity in the conventional coal-based generation. So I think we are very focused, and you will see very good results going forward also, as we have done and as we have demonstrated also in last 6 quarters continuously.
Sure. What about plans and options to monetize the renewable business assets? We also understand that the formation of the infrastructure investment trust for the renewable business has been called off. If you could share with us what the update is on that front, as well as on expected timelines, what's in store.
Yeah, last year we had taken up the InvIT proposal, and we did move on that way to discuss with potential investors from India and outside India. That was primarily because we wanted to grow our renewable portfolio, especially the utility scale generation. And we had a huge debt on our books. Fortunately, last year we have been able to divest many of our investments outside India. And we got nearly 9,000 crores of money from those divestments, and also the pref capital which was put in by Tata Sons. And that has, to a very large extent, reduced our debt. Today, we are at something like 35,000 from more than 43,000 last year, which has made our balance sheet very healthy. We have a debt equity ratio of 1.42, down from 2. And which was nearly 2.5 2 years back. And when we looked at the whole opportunity that we have, we found that renewable is something that we want to grow very fast. And we are uniquely positioned because there is no other utility who has the full range of renewables. And during our discussions with the investors, we realized that we have a great opportunity to demonstrate leadership, both in thought and in action, of leading the ESG roadmap for our company by consolidating many of the renewable businesses that we have. So this is in very advanced stage of discussion, and hopefully in the next few months we will share with you the developments on this and the final decision that has been taken.
Great. Okay, on other fronts as well, Mr. Sinha, initiatives to reduce, the Mundra under recovery losses. If you could share something on that with us, and any status on the tariff hikes on this front?
Well, on Mundra, we took few initiatives. The first initiative was that over last 2 years, we have done a huge amount of blending of coal. And that has given flexibility for us to get coal, not only the one that we were getting from Indonesia, but also get spot purchases and any other coal which is available in different parts of the world. And that flexibility has helped us to bring down the overall under recovery that was there. The second thing that we did last year is that we reduced the debt of Mundra from 8,000 crores. It has now come down. And this year we'll get the full benefit of interest loss or interest reduction that will happen. So we have taken internally a lot of steps to improve the performance of Mundra. And our under recoveries have reduced drastically. Also, when we look at Mundra, we look at the cluster of both coal and Mundra. And what we are seeing is that the Indonesian coal prices have gone up, and that is giving better results for the coal investment that we have done. So on an overall basis, I would say that we have done exceedingly well on Mundra in bringing down the under recovery, and we expect that this will continue going forward also. So I think we are very much on top of the issues of Mundra. The big issues that was there, we have been able to sort it out. And going forward, the type of pain that we were having, that will be drastically reduced.
Just wanted to understand what your outlook is as well on your coal business, the outlook on the coal segment and Indonesian mining. How are things shaping up on that front?
There has been a lot of yo-yo in the coal market in Indonesia, primarily because of the type of purchases that takes place from China. China continues to purchase huge amount of coal, at least in last 6 months, and that is why the Indonesian coal prices have gone up. Of course, China has banned import from Australia, so there's a lot of coal that is available in the spot market from Australia. So we definitely look at using some of that coal for our plant over here. But in the short term, we expect that these prices will soften. Possibly in next 6 months, we expect the coal prices to soften because China does purchase certain quantity, but they have also quota restrictions. And once they implement the quota restrictions, the Indonesian prices will come down. Till that time, we will, of course, get a better yield and a better value for our Indonesian coal companies. As far as Mundra is concerned, we'll have to continue to look at blending coal and getting more of spot purchases and distress sell coal cargoes in the coming months.
And what is the outlook on your overall business from the Odisha Discoms? Can you give us some sort of an update on the Discom business post the Odisha acquisition? Tell us a little bit more about the higher contribution, the execution of solar EPC projects in the kitty as well.
Yeah, so Odisha Discom, we took over 3 of them last year. The first one was on 1st June, right in the middle of the COVID and with partial lockdown. And we have been able to really improve the performance of the company in terms of operational performance, reliability, customer service. And also AT&C loss, our billing efficiency and collection efficiency has improved drastically over there. We were expecting that when we had bid that for the first 2 years we will make losses. But fortunately, we have been able to turn around our Odisha Discoms. The other 2 Discoms we took over on 1st January, and because of our learnings in the central Odisha Discom, we could use it over here, and the ramp up has been much faster. And all 3 put together, we have made a cumulative profit in this quarter of nearly 30 crores, which we had actually planned for a huge loss of more than 200 crores. So I think Odisha Discom, we have come to age. We have been able to ramp up our performance, and this will only improve in the coming quarters. We are very confident that this year will be a very good year for us in Odisha Discoms. We'll make much more profit than we had anticipated. And it will also mean that for the first time in the country, a large area which consists of both urban and rural areas, how distribution reforms can be carried out, and possibly will be a precursor to many more such reforms happening in the country.
Sure. Mr. Sinha, what I want to understand is about your balance sheet deleveraging plans, and you've been, really focusing on the same as well. After steadily reducing debt up until now, help me understand what are the other key assets that you're looking at to try and aid the deleveraging process forward?
We have now 3 more assets which we are deleveraging. And which we will do it in this financial year. The first is the Zambian asset, which is a hydropower plant, and we are in very advanced stage of discussion with the Zambian government and the company, the Zambian company over there, which is a government-owned. The second is the Georgia asset, which has fortunately done very well after commissioning last year. And we have now gone to the market and are looking for a suitable buyer. And once we get a proper valuation of it, we'll do that. The third is the small coal company which we have in Indonesia. We want to divest on that. In between, the market was not very good last year. Now that the market has improved, we feel that in next 6 to 9 months, we should be in a position to divest. So these 3 divestment will happen. And of course, at one stage, we were looking at divesting Tata projects. That has not happened, but once the market improves and the COVID is behind us, I think the construction business and EPC business will definitely look up in the country, and we will possibly be at some stage able to divest from that.
Sure. All of us are waiting for that, aren't we, once the pandemic is going to be over. But, Mr. Sinha, continued Discom losses, they continue to remain a concern. Correct me if I'm wrong here, because, even addressing operational issues is key right now from a longer-term perspective. You have been very vocal in your call for privatization of power discoms, but what, according to you, could be the challenges that could come along to try and execute the process?
I think the government of the day should be committed to bring about the privatization process. I think the government of India has very clearly spelled out that they will de-license the power distribution business. And this is very important if we have to bring the reform in the power sector, because Discoms ultimately collect the money, and that money goes to generating companies, conventional or renewable. It goes to the transmission company and to all the technology developments that happens. So the distribution reform is the crux of all the challenges in the power sector. And we have demonstrated in Odisha, because what we did in Delhi, which was more of an urban area where we brought down the losses from 53% to nearly 7% this year. We have also done it in Odisha, which has a mix of urban and rural areas. The total area of Odisha, what we are now covering is 150,000 square kilometers. We are talking about nearly 9 million consumers that we are catering to. And there's large number of consumers in rural areas, in far-flung areas, and how we have been able to reduce the losses. And that's how you have seen in our performance that in just 10 months in the central Odisha and 3 months in the south and west, the losses reduction has helped us to make profit from a loss-making company. So I think the way forward is that you need to get people who have the domain experience, understand the technology of distribution. It's not just the wires, but also the digital technology that needs to be used to get both information and flow of electron can be controlled. And I think that's the only way that the big change will happen in the power sector in the country. This is the biggest challenge before all the state discoms all the state governments, as well as for the central government. And I do hope that the type of changes that they are proposing in the Electricity Act amendment, in the tariff policy, and now in the electricity plan that they are coming up with, these will get comprehensively addressed.